Guys, let's talk about today's trading, what some of the good trades would have been, and we'll discuss the daily chart at the end and see where the market might be going. So today opened up a little bit below yesterday's close. We came down, got this double bottom here at the moving average. So it tested the moving average here, went up, tested again with this bear bar, and the next bar was this large bull body. It seems to me there would be buyers above that for at least a move up. This is the possible, could be possibly the low of the day here. So if you're buying above that, you want to be swinging. You want to be going for 2 times your risk. Maybe buying below there. Trying to get out above yesterday's high. You want to be taking for a profit up there. Now, that didn't happen today. Instead, the bulls that bought there ended up getting trapped. I'll talk about that in a moment. If you're buying here, you want to be out at least by under this bar. So what had happened, the bulls were moving up. They failed to go higher. They made a couple attempts to go higher and then got a second entry short. So first entry here and a second entry here. So the bulls are failing and the bears aren't taking control and they're giving chances to get out here. So if you buy here, you should be out at least by here, which means you either break even or just out with a couple of ticks of a loss. So that's a good trade because some percentage of the time you're going to get that large swing up. And then a decent percent of the time you're going to be able to get out with a small loss or break even. And then a much lower percentage of the time would you actually lose in the full trade. So that's why the math works out for that to be a good trade if you're managing it correctly. I think I can go ahead and add in that this is a good short below there for the reason that I just stated. Like the bulls aren't getting out below that bar, and when one side is getting out, it's usually good for the other side to get in. And you can see what happened. The bulls, they were trapped, so they had been buying, and then they were getting out, and that's what created this huge bear bar. And in your own studying, when you're looking back on the days that you traded, if you notice large bars like this, look what came before it and see if there might have been some sort of trap there. And that might help you get a grasp of what the market, of how it moves. So bulls were getting out below this bar, which created this large bear bar. And then the market was down for the rest of the day. When the market's falling, I like to look to the left, look at prior lows, see what kind of magnets or targets there might be below. Today, I didn't really find any great ones. There were a couple prior lows. They really didn't come into play very well today. But what you can do is draw your measure moves on the chart. So this pullback here from this high to this low puts us down here. And you notice there's pretty steady buying for about 8 bars. And then it got down to this level, and then bulls bought. I mean, bears got out and bulls bought, and there was a little bit of a pullback there. So that's ways you can figure out where the market might be headed. And I think after we've had this bulls, so we had this prior low of yesterday. Bulls tried to create a failure, and they tried to buy, but then bulls ended up buying. And they weren't able to hold it above. Then bears took control again here. They had 2 strong bars, these 2 here, and with that, looks like the market's going lower. So I think you could be selling below that bull bar. You could be selling below that or the close of the bar, or maybe selling below a follow-through bar. Even if you're trading small, if you have to trade small to reduce your risk because your stop's going to be either above this bar or somewhere way up here, there might be large risks. So if you have to trade small, then that's what you need to do. And if you can't trade small enough, then you don't take the trade. But I think shorting here is good. Finding a way to get in, maybe at a lower time frame chart, like a 1 minute or a 2,000 tick chart, looking for pullbacks on that'd be good. Trying to find a way in. As the market's going down, it really has three phases, right? So there's a breakout, and I'll go ahead and draw it in to demonstrate. There's a breakout, which is this part. Then breakouts turn into channels, which is this. And then channels turn into trading ranges, which ended up being this area here. So we can see how the market changed, and you could tell it was changing because it was no longer only sellers making money. So all through this, during the breakout phase, only sellers make money. Then once you notice that buyers are able to make money, bulls bought the close of this bar, scalped out. They were able to buy below bars, and they could scale in, and they'd be able to get out. Notice here, bulls were able to buy above this, and they were able to make money. So now at this point, bulls are able to buy above bars and make money. So that signals at least that we're entering a trading range phase. So once you start to see bulls buying above bars, it gives credence to the idea that we are transitioning into a trading range, and in a trading range, you want to be selling high and buying low. You could argue that this is a wedge here. 3 pushes down, 1, 2, and 3. And market might be trying to reverse here. I think this is a good bar to, if you're short in this is a good bar to get out above. I think it's reasonable to buy as well. I think I would rather hold off on buying above that. I would rather wait to see. I think I'd be more bearish. I'd rather just, for me, I just avoided buying above that. But if you're short, I think it's good to get out above your shorts above a bar like that. Heading over to this trade, we had another wedge. First push, second push, and third push. And remember, wedges are reversal patterns. So the larger trend has been a bear trend. And then in this pullback, we're getting a wedge. And we also got a double top here. So we have a wedge, which is a reversal pattern. And then bulls are above the moving average here, but they're failing. They failed here, failed a couple times here, and then got this bull bar that failed, and this large bear bar closing below the moving average. So the bulls had their attempt all through this area to go lower, and they made their attempt to go higher, but they were unable to. And then bears took control here. And similar to what was happening here, I think the bulls are getting out and the bears are getting in, which creates selling down. So I think that's a good short there. And you want to be swinging. You want to be going for 2 times your risk might be an idea. You might want to be selling down to try to get to the lows here. On the next trade, you can see we have a double top again. So bull bar and a second bull bar, and that is a double top formation there. Then bear bar, and look at sold down again. So I think those are the key ideas on the 5-minute chart. Looking at the daily chart, you can see today was a large bear trend day, and it's been the largest we've had for a couple months now. So it came down to the moving average. It actually closed below the moving average, which is good for the bears. However, since it's been above the moving average for a while, I would expect that the first close below it would be bought. So I'd expect some buyers after this, but I'd also expect some sellers because they'd be expecting a second leg after a bar of this strength. So I'm expecting more down for the 2 reasons that, one, we would expect more down after a bar with this strength. Then also we were starting to get a bit overextended. The bulls were getting a bit overbought. So I would expect 2 legs down because of that. The bull's been buying, they were making money. Now they got exhausted up here. They hit their measured move target that we had discussed previously. And now, right, they made their money, they're stepping aside, they're going to step aside for a little bit. So I would expect more down. But I'm also thinking, I think there's going to be some sideways movement here. So I would expect either Friday, Monday, or Tuesday to be a bear day. And then probably, one or two of the other days would be a bull day. So I don't think we're just going straight down or straight up. I think, just for an example, let's say Friday it pulls back, so it's a bull bar or a doji. Then I would think either Monday or Tuesday would be that second leg down, and we'd have another bear bar. And then from there, market has different ways it could go. It could fail to go lower, or it could fail to go higher. If it fails to go higher, look at what we have below. We have this gap that we've been talking about for a while now. And if it starts to get close to this, then this is going to be a very important area, and the market will definitely get there if it starts to get kind of within that gravitational pull of it. So if it's starting to get in this area in around 5550, 5500, and you're starting to get some sell setups, then I would definitely look for this gap to be closed down here. Another target is the low of this bull bar that was the first of this move up, and that's another target that the market likes to get to. So there are my ideas. I think Friday could be a small bull day or a doji day. Could be another bear day. I don't expect it to be a strong bull day. I think the buyers, I think buyers can reemerge, but I don't think they're going to be super bullish for a little bit here. All right, thank you guys.